Hey guys, so in this one we're going to up our size slightly, trading the dollar CAD. Someone asked me, you're trading all these cycles, can you make more money, is effectively what they were saying. Normally on these videos I just do the 4 hour and the daily so people can understand and so we can fit it into half an hour. If I was doing what we all do inside our trading room, our members and ourselves, I would be trading on all time frames and taking loads of trades and would be here for a very, very, very long time. So the answer is you can up your size if you're not trading a diverse portfolio. Obviously, in these videos, we're only trading one asset and it's not diverse. So for that reason, we can up the size. It is better, as we do mostly, like I said, in our room, to trade a diverse portfolio, because if your asset you're trading doesn't move a lot, obviously then it's going to slow your gains generation down. But if you're trading lots of assets with low sizes, you can control your risk and you can stimulate gains continually on a daily basis. So instead of 0.1 max, we'll go for 1 standard. I'm going to let this data load a bit more. There we go, we've got a little bit. And I'm just going to kick things off with a third of a max size, so 0.3. Don't forget, if you want to learn to trade, you're watching every single hedging video I post. You're seeing me end in net gains every single time, no matter what the market swing ends up like. Then just go underneath and you can start trading with us. You can learn with us. We've got lots of professionals in our room you can also talk to and learn from. So great place to be if you're someone who wants to learn to trade for income. So shorted that 0.3, it's going into drawdown with a bit of support. So I'm going to get long 0.1 just in case it continues like that. Okay, max drawdown is going to be about 10 grand. And like I said, we're just scaling up our risk because we're only trading one asset. I'm going to add another hedge long there, just 0.1 in case. Okay, that's because we can see price is slightly supported again. So I'm out that. I can add a little bit more to my short exposure. I haven't got a ton of data, so I don't know how high or low this price is overall anyway. But we can figure as we go. So out that short. And if we get further pullback, I'll kill that one as well. So I'm out of those positions. I'm going to take a very light long just in case we begin to fall. And I'm just going to fast forward it a little bit quickly. Like I said, remember, you would be taking various trades in the day here, so you would be making more money. But like I said, I would have to sit here and take many, many, many entries, and these videos would be very, very long. And that is basically what we say for our Academy members inside. So already some reasonable gains here. I'm going to take another 0.3 at that point. If we rally higher, I'll consider adding later. Okay, I can have an immediate hedge here because you've got a bit of support for price out there. Okay, just let it run some more. Former entry of 0.3. I'm not going to add just yet until you get a real push higher if you get one. Just fast forward it a bit more. Okay, I want to be out of that. I'm going to flip long. I'm going to take this one at 0.3. Okay, I'm out for that. Very decent. Add again 0.3. Oh, that would have been decent. That's why you've got to be careful on how fast you fast forward. Okay, I'm out there, $66, so $1,000 up now. Like I said, if you deviate the sizes a bit, you're going to have larger gains, but you are trading only one asset. So if there's a period where the dollar CAD doesn't move for a week, but something else does, i.e. the FTSE or whatever it may be, then I'm going to miss out, on those entries. So you tend to get a high variance really within your trading. You end up making a lot of money all at once and then not a lot of money all at once. That's why it's an ideal situation to have where you diversify. Okay, so we'll cut that out. There you go. And I'll add a short, slightly lighter because you've got level decay. You're hitting the same area a lot. And price is obviously supported. You can see that because it's not falling very quickly yet. That is out for gains there. I'm going to drop the size 0.1, play again, see where we end up. I'm going to add again because there's a bit of support here. There we go. So I'll kill that. Now you're getting a bit of channeling momentum. Obviously, this is very ideal, but it needs to be done with lesser risk just because you could have what some might term, a breakout, if you like, either way, up or down. So I'm just going to kill that off. So we've got a reasonable amount of gains banked now. Price supported again, so I'm going to take a 0.1. You can see probably on the 4 hour what that looks like a bit better. Can add another one down here. So we're 20% of our max size in. A further fall now, I'll add another one. Okay, so I'm just spreading my risk out here just in case price really tanks. Can kill that. I can add a light short just to hedge half my exposure long. Okay, because I added a light one, that's left me in a very decent position just to add another 0.2 and press play. Okay, there's a bit of momentum coming off from that, so I'm out. I could actually just add, instead of having a 0.2, just have a 0.1. I'll kill that. Okay, and price looks a little bit supported now again, so I will be cautious. Okay, now you're pushing around the high. I can hedge these shorts immediately. So I've got 1/3 of my exposure long now, just in case you break the high. Okay, so really, we're going to get either way in a minute, I would imagine. Okay, there we go. So I'll kill that. And I'll play a bit more, see where we end up. Okay, great. So I'm out that short, and I'm just going to add another 0.1. Any push up and I'll be out. Okay, I'll have that. And now price looks like it's, still sort of channeling, but it looks semi-weak. So I'm going to try to take a very light short just to hedge a bit of that position up top. Okay, now I can be a bit more aggressive. And because that is a long at the top of the channel, I'm going to consider closing that. So that's my first loss, only one. And I'll kill that. And I can take, so I've effectively now just moved it down because of those hedge gains. So that was, there we go, kill that. Price still supported, but I can add up top again, 0.2. And if we start to rally, I will just look at beginning to hedge. So there's 1/3 of the exposure. Short, I've just hedged it long. If we fall under my short, I'll exit. There you go. And I'll leave both now. Won't add anything long until the lower side of that channel, under this short. And again, I'll just make it light in case you break. Okay, so drawdown picking up a bit. And if you start to break lower, obviously, again, I can just do the opposite of what I did, which would be to hedge short. So any good pullback, probably back to early resistance in line with something like this, I will hedge. Okay, so price is trying to creep up, but it looks weak. So I'm just going to take 0.1 short. Now it looks a bit more supported. Okay, so we'll see where we get now. There we are, so I'll kill that hedge. Do I want to add long? No, it just doesn't look right for me. Okay, that I will take a hedge short on. I will take a little bit there. Push up again, and I'll take another hedge short. I'll drop the time frame so we can see this play out a bit. So now we're channeling slightly unless we break higher, which we are now. Price is supported a bit there, but then rejected again. Okay, can kill that. And I will actually I will leave this how it is just for now. And what I will do actually is close the top one. So I took a loss there. That's loss number 2. I'm still well into positive equity anyway. Looks like the market is subdued a lot. So I'm just going to add a short, head short on that former long. Okay, nice drop there. Kill that. So that's 1/4 of the overall exposure on the loss. I'll add a couple of these, I think, or a few. I've got 0.4 long now. So picking up a little bit of drawdown because the price is falling. Don't really want to add just yet. I'm still incredibly far under max drawdown. Okay, market does look subdued to me. So if I can get rid of those longs, I will. And if I can flip short, I also will. Okay, so I'm going to put 0.2 in case we fall. I'm going to leave those longs in case we rally slightly above that. That would have been good. Okay, there you go. So kill all those. $1.50 loss, $1.60, something like that. Okay, so I can add again short, kill it. kill it there. And now I can actually add another long back where it was, because price is now telling me you've got a bit of support there. Kill that for gains. And now we're coming a bit closer to our upside former entry long. I'm going to take a short lightly because of that supported price. And I've got the option now to kill that. So I'm out. And I'll look to hedge a little bit here to cover those shorts. Kill that and kill that. And now I can dip buy. I can also actually add a larger short now. Okay, so I'm looking for a bigger swing fall now if I can get it. Price still very supported, so I will start to hedge on a fall now. I've got 0.5 in play, so I'll take 0.15 if I can as a hedge long. Any push lower, I'll take it. Any push higher, I'll take it. Really looking for either way would be ideal. But now we're channeling a lot, which is interesting. I'll speed that up. God, it's got to go one. Oh my word, look at that. See, this is what I mean. I would have traded all of this sideways, but because I'm only using these, sort of tighter time frames, it's not as easy to show in a short period of time. I'll take it to 0.3 long then. Nice move there. I will add 0.15 short. Now I need to be wary of the growing loss here. I will actually just keep that short there. Okay, so a bit of gains on that move there. We're now fairly out the money on our shorts, and we had a decent push higher as well. So really, if we can get something back here like that, I'll go back to 0.1, see if we can get some hedge gains in. Okay, so pulling back, I will add again long. So I've got a couple of longs here. Kill that, it's about 40 bucks. I'm not going to close this until we get a decent pullback nearer. I can just add short because I've got, if you look at my equity, it's well into positive still. Our max drawdown, because we're plus 1,000, we're 11,000 off the max drawdown now. So, I'm really not in a lot of danger here. I don't have to panic about that short I've got, which is why hedging is so ideal, because I've managed to take gains really on both sides of the market the whole way. And obviously, if that cycle starts to reverse and you come under, a position you've got wrong, you've got the ability really to deal with it accordingly at any time. Because like I said, you can trade both sides of the market. And it just allows you to make more money really as well. That's a key thing, because you're just taking more entries. So I've got 0.4 as an exposure now, fairly sort of sideways on price movement for the dollar CAD at this point. Okay, there we go. So we're coming up a bit and I can stretch things out. All right. So I've now got a reasonable amount in play and the drawdown is picking up very quickly. Okay, so because of that, I can perhaps take a local entry off and obviously start to look to hedge. Okay, so my equity still nothing near my max drawdown, and now I've got 0.7 in play. I can hedge part of that long on a fall, and a further fall I can do the same. Okay, so there's gains there, and then if it falls again, I'll hedge again. But we need a larger pullback. So at this point, you've gone 1,000 pips up, and we're still only just in negative equity. Now, I say that because, again, a lot of people would have been stopped out by now. They would have margin calls and they'd be pulling their hair out trying to figure out what's going on. So, we're doing quite well. I'm not going to hedge 0.15, just going to go for the 0.1 until we can work out of this cycle. Okay, so pulling down a little bit, but still supported to the upside. Speed things up a bit. Don't really want to add anything short yet. Okay, now I could consider it because I've got some hedge long exposure in there. Kill that. And I'm just going to end that short there and just add another light long. Okay, more hedge gains there, $65. Add a DCA short, see if we can get some DCA gains in. Help support our equity, $50. It's okay. Light long there. Another 1/10 of our max size, not going mad. So now we're positive equity again. All right. So really, when you're using this method, you're going to see there is a variance to your overall equity. Sometimes it's going to be positive, sometimes it's going to be minus. But overall, as you gain a higher balance effectively, it's going to support your equity so that the drawdown swings leave you in a plus position all the time. As you're seeing on every video I film, that is basically how we're getting to that point. Because over time, the edge is playing out more or less and you're collecting gains. Only if you have the correct rules and specifically risk rules is that possible. Because obviously, if your sizes are completely out of order, you're going to find that you can't sustain that whatsoever. Now, I've fallen a reasonable amount towards the low previously. We're now, got a reasonable uptrend here. So I'm actually going to add a hedge long and I will close the loss and just bring the average up. Okay, so that's dealt with that. We can look to work now to get that money back, essentially. But because I removed it there, I can actually add it up here. So there's a good chance I'll get it back anyway, overall. I mean, even a $54 gain there, it's only going to take me a few of those, really. And I'm back to where I want to be, recovering that whole loss. So add another short there. Price still fairly supported, so we might keep going higher. We've dealt with a chunk. Remember as well, even though I closed out that loss, I've moved the average price up. Not only that, I've removed a large chunk of drawdown as well. So ultimately, when the market resets overall or we get a larger swing, that is a point when you would probably wash out the majority of your positions and then withdraw a salary, if you like. Some people do that on, sort of yearly basis, monthly basis, weekly basis. You can see again, that's another $60. We're working easily towards claiming back that $928 we just sacrificed. But that is the trade-off, for not having a stop loss, essentially. And in my opinion, it's better. At least it works for me. So, and bear in mind as well, the swing on that, I mean, that was what, 1,200 pips or something like that. And we're in positive equity, no problem, on 1,200 pips. I mean, the amount of people that have come to me and said, "Oh my word, I'm going to get margin called. I'm 50% down or something," and it's on a move about a quarter of that. Okay, so again, I ask, as I do every video, if you can survive any market swing and produce more profit than you're gaining in drawdown, essentially, then you should make money. It's the same as if you're using a stop. In that regard, the more profit you make versus the losses, you should make money overall. Going to take another short because that's not the best area, and I will look to now hedge on any falls if I can. So I'm out of that. Now my short exposure is 0.4. I've got a tiny dip, so I'll take a quarter of that long. I won't take anything long further unless you get a decent push. Drawdown now fairly low still. The drawdown running is basically a cost of running the business, if you like. Any push lower on that short and I can kill it. There we go. So I'm out. And now our exposure is fairly matched. I'm not going to add anything long unless you get a good push back down towards those shorts. Put it on the 4 hour so you can see. Like I said, a good push down to the shorts. I don't really need to wash them out because we're now channeling. And any push up again, I'll kill it. So fairly light there, but I'm out nonetheless. And you would expect a larger retracement at some point to those lows anyway, so there's no need really to wash them straight away. The long we've got is still sitting at the high. Now you're seeing this sort of channel formation occur. So any break of that, and I'll kill that long. Okay, still not quite there. And a larger fall is really needed for those shorts. I think I'll hold it just for now. And on a larger push, I'll kill it. And like I said, I do expect we'll probably get nearer those shorts at some point. So still going along, well, what I thought was max speed. Seems rather slow. Price still subdued a bit. Okay, I am just going to remove that. And the reason why is so I can just plug another long in to hedge those shorts I'm still out the money on now. Getting near to that one. Which one is it? That one has got a bit more weight to it, so I'm going to kill that. And as I say, I'll probably recover it anyway in gains pretty quickly. And plus I can move it up. Now I'm not going to short the 0.2 because you're only halfway between this sort of sideways channeling movement. Anything higher I'll short again. There you go. So now you can see the market forming a tentative sort of closing in downtrend, if you like, but the equity drawdown well into positive again. Add along there. Okay, I'm going to kill that short, and now I'm left with just that one there. I could even close that, and you can see now I'm well into net gains. Okay, and like I said, we're doing this on time frames where it is slow. Okay, we're doing a day at a time. Within one day, you could have taken 5 times the amount of trades that we are on, doing it the way we are. So just bear that in mind if you're not quite clear on that. I'm now going to take a larger short bias because the market really looks subdued a lot. I'll go for a 0.2 long. And any reasonable fall lower, I can add more. But really, we're looking to the upside now for a push, and we'll kill those longs overall. So still moving fairly slow. I could take some short perhaps on a bigger rally. I don't think I want to add long just yet. Price is a little bit subdued, so I'm going to hedge some of that exposure. Get a little gain there. And again, now, we can look to close the cycle. So start to work out of our overall exposure if we can. Okay, 0.2, I'm in long. And any real big swing push to the upside is what I'm looking for at this point. Can zoom out a bit because price is fairly low. Yes, it is subdued a lot to the south side, but you would expect some long side momentum eventually. We've now traded a cycle from 0.94 to 106. Awfully long way, 1,200 pips or so. So price supported and moving up. Don't want to put anything short. I don't need to. And a bigger swing upside movement is really what we're waiting for. Still fairly supported, but also fairly subdued. Okay, I could have hedged all of this, like I said, but I want to ideally close the cycle out. So what I mean by that is completely close everything and just finish trading basically and withdraw the money. Again, you could have hedged this multiple times because the price is basically stuck with this channeling momentum. I'll play it again. Put it on the daily. We've got it on max speed. Okay, so lower, I can look to add again because we've now got even lower price. 800 pips off the very high or so. I can take that. And a bit of momentum coming in long, but we're also slightly subdued, so I'm going to hedge part of my exposure short just in case you get lower. And because I took gains on a former long, it's not going to be a big issue. If you do any dip further, and I'll just take it long. Immediately hedge that short on the momentum we're seeing now to take that short out. Still coming to the lows. Positive equity still. So any push up. So market obviously is still subdued to the south side. Could start putting some little covering shorts in. 1/6 of max drawdown. Problem is on the daily you can't really see what you're doing. Take it out. So like I said, although I'm picking up drawdown on longs, I'm collecting profits on shorts at the same time. So I'm not really losing what the market is dropping me into drawdown on. And that essentially is how you get the edge from hedging. You're not losing what someone else would. Someone using stop losses, for example, they would be losing the real amount of the market, whereas you're not, because you're taking gains like that where you can. And that's really, like I said, how you gain the edge here. And that's why hedging is great, because a stop loss is definitive. It's where you're completely out of the market and there's not really much else you can do about it at that particular point. Now, I'm going to play this further. I'm not going to add any shorts. Just like I said, I want to sort of exit the cycle if I can. I will hedge long on that former short I took in case we get some upside momentum. We didn't, but it allows me to close that short out. I'm now in play 0.5. I can add another 0.2. Okay, and I can let things run because I've got good gains banked and it lasts. I can add a light short in here just to protect a bit of my overall long side exposure, and we can see really where we sit after that. So we're pulling up a good supported price there, coming to those highs. Now we're falling a bit further back. We can see really where we end up in a second. There we go. Good old drop there. And further hedge gains. Like I said, instead of losing what someone would on a stop loss, we're still making money throughout, the whole swing cycle, particularly of this sideways movement you can see forming. So this usually is where, us with this method at the Trading Mentor make the most money. Obviously, when it's sideways, you can just keep trading it long, short, long and short, long and short. And it's fantastic for gains generation. Even with the stop loss, I would say for a lot of people, it's also great. I will kill that position off because I've got the means to do it now. I can let the market run. I can kill that one off for gains. If I want to take it long, I can let it fall. And now if I really want to end the cycle, I can be a lot more careful with my entries, because if we break to the upside like this, I don't want to get caught really, if I can, with a short that low. Although my overall drawdown now, of course, is relatively low anyway. So I can kill that one off. I can add another long, very lightly there. And I can see where the market takes me next. Big push up there. I'll kill that for gains. I will add a light short just in case we keep rallying beyond that high. And then I can exit overall, I would say, on that short. Oh, there we go. So good hedge short there. Take another long. Okay, off the lows, kill it. And a higher push up again, I will look short. So I can actually hedge a little bit here. I haven't got an awful lot of long side exposure, so that's decent. I can leave that there just in case we fall, which we do. So now a good lot of gains and a nice equity drawdown there in positive. Again, like I said, as the edge plays out and as you're taking more gains than the market is giving you in drawdown, it gives you the space really to be a bit more flexible with leaving positions on, in loss, or having a longer period of time until you wash them away, if you like, with your gains taken already. So I'll kill that again. And these sideways markets can persist for absolutely ages. Even people trading them with stops will just still get stopped out, even though they could be generating absolutely loads of gains. So the market is now pushing low. I'm just going to spread out with another long. Very subdued at this moment. So it might delay how long it takes us to exit the cycle, like I said, but we're still well in net gains anyway. So it's not really a big deal, is it? But like I said, it'd be ideal to end the cycle. And again, you can be more flexible with where you add. You can add lower now because your equity is larger, or at least your balance reflecting that. So I can kill this one. I can then hedge short 0.2. That was probably a bit too large. To be honest, I don't want that. I will change it to a 0.1. Probably wouldn't have been a nightmare, but you know. So as I say, you can see the edge now that we have playing out. I am not losing money like a stop loss would cause me to. I'm actually making money while I'm losing money on open positions. That is really what I'm getting at with all of this. And that's why I'm able to take so many gains and so few losses. Okay, now on a larger rally, I will look to exit the cycle. So that's what I'm waiting for now. Okay, so I can take gains there. I can wash away that light short I just took. And now I've got a bigger push. I can add that light short back up here. And anything higher, okay, I can actually just close that for long short side hedge gains. Kill that. Okay, good old push here now. Gives us a chance to take a larger hedge. If that goes drastically higher, then I can, like I said, just exit the cycle. I would have liked to close that former short just a minute ago. Okay, so I could have, if well, in real life, I would have been able to take that off anyway. So now we've got 817 there. I could simply, so I've got two options. I could close the top one, which I'd definitely do at this point, and I could just continue trading the cycle now if I wanted to. But for the purpose of this video, and because I want to end it here, I can close that and close that, and you can see I'm in net gains over the whole period. Every single video I film is like this. This is how we trade. You know, it's a profitable system for us and our pro members. Go underneath if you want to join and learn.